Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of April 28th through May 2nd. We're in part one of our weekly trading game plan for this trading week. We're going to try to help you make money trading this May. So let's get started. Welcome, Fairchild, MD. Thank you for joining us today. Hope you all had a great trading week and are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for April 28th through May 2nd. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, our trade ideas for this trading week, and you can find a direct link to this Google document in the description box below. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week, as well as previous weekly trading game plan notes, and you can also find a direct link to this publicly accessible Google Drive folder in the description box below. So firstly, we'll take a look at how the markets ended up on Friday, and then we'll look at a breakdown of the major indices and the technology components. So we see all the markets, all the indices ended up positive for the end of the week on Friday. See the Dow was pretty much break even, but did go positive 0.05%. NASDAQ had a nice up day, 1.26%. S&P up 0.74%. Had 56% advancers, only 40% decliners. We got 67% new highs, only 32% new lows. We've now got 31% above their 50-day moving average, 68% still below, and 27% above their 200-day, still 72% below. So still a lot of weakness under the covers, although Friday again was a pretty strong day. You see it was driven mostly by the Mag 7s, so Mag 7s drove the indices up. We can see the breadth, however, was pretty split. We'll see in the distribution of advancers and decliners was actually quite balanced, even though the indices were significantly up. Again, driven mostly by the large caps, Mag 7s. Most of the other sectors pretty mixed. Welcome, Ricky Khan, Gerald Fitz. Thank you for joining us. Hope you had a great trading week and are doing well. Some of the headline news: 9 ways tariffs could upend stocks. Wall Street had big tech earnings, U.S. jobs. So we'll talk about the economic data coming up, the earnings coming up. S&P closes higher for the fourth day in a row. So we had a 4-day rally in the S&P, not just 4% gain for the week. Ken Griffin criticizes Trump tariffs. These jobs are not coming back. I would agree with Ken Griffin in that, in my personal opinion. NASDAQ climbs more than 1%. Stocks strong week. Salt oil bouncing off 60, up resistance at 65, so pretty much range bound lately between 60 and 65. Saw natural gas actually dip below 3 and then rebound back above 3 at 315 right now. We saw gold make a new all-time high up over 3,500, retreated slightly, bounced back, it's now at 3,330. See all the major indices pointing up with the Russell small cap slightly negative. Bitcoin had rebounded back up to about 95, got rejected off 95, so range bound right now between about 90 and 95. So a significant retreat in bond yields, so bounce back up in bond prices. So now the 30 years down at 473, 10-year back down to 426, and the 5-year down below 4% at 388. So again, a significant retracement in bond yields, bounce back up in bond prices, so good for housing, etc. So if we look at a breakdown of the major indices and the technology components, again, reminder, you can see these screeners in our screener sheet of our ETFs and watch list Google Sheets, and also in our notes documents. So again, although we had that short-term rally back up in all the indices, we can see pretty much a downtrending, downsloping. We've got a death cross in the Dow. We've had one in the IWM. IWM did gap up and then kind of chopped around. And Dow bounced up. It didn't quite make it to that high when the tariffs were put on hold. S&P did break that high when the tariffs were put on hold. Again, we see a death cross in the SPY. So again, the long-term trend is down, very negative symbol or signal with the death cross, but we did get that short-term relief rally. Similarly with the Qs, again, death cross on the Qs, gap up above that lower trend line. Going to have resistance from the 50-day moving average pretty soon. So again, although we had that short relief rally, it did break the high of the tariffs being put on hold. Again, long-term trends in all the major indices continue to be down, and we've got death crosses, very negative signals in all the major indices. So again, protect your profits, watch out below, as it were, going forward. We'll talk about some of the news that might have spurred that four-day rally as well. We look at a breakdown of the technology components. Welcome, Sydney Osborne. Thank you for joining us. Hope you had a great trading week and are doing well. So we see ARK-K pretty much making a death cross as well and testing that convergence of the moving averages. Did have a nice little rally, but again, significant resistance. Gonna have a death cross on ARK-K. Biotechs, again, not responding as positively, very negative downtrend, but it did get a short relief rally. SOXL Semiconductors looks pretty good. Looks like it's trying to swing back up after being beaten down for a long time pretty severely. So if you're interested in long-term swing trade in semiconductors, I think SOXL is a possible opportunity there. Just full disclosure, we're already long significantly in SOXL and some semiconductors like AMD via AMDY. Mag 7s, again, mostly driving that trend in the index, but we see we had a death cross there, still long-term downtrend. A lot of this will depend on their earnings, what they say in terms of guidance going forward as they announce earnings. Had some positive news from like Google, although Tesla had pretty negative earnings, but their earnings call, Elon Musk leaving Doge or scaling back in Doge and focusing more on Tesla gave Tesla a real significant boost after their earnings call. TQs just leveraged on the Qs, again, death cross, pretty negative downtrend. So again, more potential downside between kind of that range with the quote Liberation Day bottom and near the gap of the tariffs being put on hold. Not as strong a reaction again in the broad technology, getting strong downtrend. Did pretty much fill that gap from the post-Liberation Day negativity. Welcome, Katon. Thank you for joining us. Hope you had a great trading week and are doing well. Okay, let me grab a quick drink and we'll look at the breakdown of the groups, sectors, industries, and countries in FinViz. Okay, if we look at a breakdown of the groups or sectors from Friday, we see a very risk-on move, again, very driven by the Mag 7s, but we had technology, consumer cyclical, communication services, had energy slightly positive, most negative. So again, Friday, very much a risk-on day. So rotation out of the defensive sectors, consumer defensives, basic material. I'm surprised real estate didn't do better given the decrease in bond yields, but again, it was a rotation from risk off to risk on for Friday. The whole week was more of a risk on. So again, we saw that 4-day rally, mostly just talk of potential deals with tariffs, and even though no real deals have come out, the market really did want to rally after being beaten down with all the tariff talk. And so we got a risk on a rally for this week. So the risk on sector is mostly positive, risk off sector is mostly negative. The month, however, pretty much risk off. So again, very defensive, utilities, defensives, materials. Again, we've seen that rotation, slow rotation back into energy, strong rotation back into technology this week. So we'll see if that rotation reverses. If we get any negative news on trade talks not going as well, etc., or any negative economic news, in my humble opinion, we could see that rotation and that rally reverse pretty quickly. If you look at the breakdown of the industries, can rebound, lower interest or lower bond yields. So we've got solar rebounding, renewable utilities. Some of the REITs rebounded. Little oil rebound, can it bounced off 60, back up to 63. Some REITs again. Some REITs still negative. Coal went negative, copper negative, so your basic materials. So again, pretty general rotation out of basic materials. Again, after gold hit its all-time high, retreated somewhat. Transport's pretty negative. For the week, autos had a little bit of a reprieve on talk of they might lessen the tariffs on auto parts, etc. And semiconductors seem to be finally recovering and swinging back up. Uranium positive, steel, most REITs positive, financials positive for the week. Some REITs, industrial, retail, etc., negative. Again, coal negative, gold negative for the week. Although again, we had that spike to an all-time high again. Silver retraced significantly for the month. Again, gold's been very strong, so we might see that rebound back up to retest that 3,500 high. Uranium positive, coking coal positive. Thermal coal slightly negative. REITs pretty negative for the month. Steel negative. Transports, railroads, etc. Copper negative. Silver quite negative for the month, although it's been running up. And oil generally negative and down towards 60. Let's look at the countries. And again, this is driven mostly by the talk of these trade deal talks going on and off. So a lot of volatility in international markets. So again, I think there's plenty of short-term opportunities for short-term traders to trade this volatility in the international markets. Generally, they've been outperforming the US, again, due to all the tariffs. So again, as we hear trade deals potentially with these countries, we get a rebound. Malaysia's been very volatile. So again, short-term trade opportunities there. Talk with trade deals with Spain, with the EU. I believe he met with Italy, so that was positive on Friday. China's been kind of holding up, so slightly positive on Friday, some significant volatility, whether they're having trade talks or not. So expect, further volatility in China. India slightly positive. Most negative, Turkey had been outperforming, Indonesia, Australia. So again, I think there's plenty of short-term opportunities to trade these international markets. I think that's where the opportunity lies. We've been talking about this for quite some time. See, for the week, China was very positive, so they pretty much settled into the currently high tariffs and rebounding from that. A lot of the other Asian countries, EU countries, again, Malaysia pretty positive. Mexico's been holding up pretty well. Brazil for the week, it's been doing pretty well. South Korea, there's apparently talks going on with South Korea. India, South Africa's been very volatile, both sides, up and down. So again, opportunities. We've talked about ETFs to trade South Africa, Argentina. For the month, Mexico's been the strongest, Malaysia, Indonesia, South Africa again. Weakest, China, Japan. Although again, there's trade talks in Japan, so possibly rebound in Japan, possible opportunity. So again, as we've been discussing for quite some time, plenty of opportunities to play these news items on tariff trade talks with these various countries, see rebounds, rejections, etc. And we've got plenty of ETFs to trade these various countries that we've been reviewing for quite some time now. So I hope that all helps. Okay, we'll look at the economic data we got last week and then the upcoming economic data for next week. Just a quick reminder, as the important economic data comes out, I try to capture it as quickly as possible, post it in the Surf the Markets channel of our Discord. Our Discord is free to join. You can find an invite in the description box below, as well as in the notes. So again, as important economic data comes out, important economic news, try to capture that, post that in the Surf the Markets channel of our Discord. You can see, try to capture a screenshot, raw data, again, any important economic news that comes out, post that real time in the Surf the Markets channel of our Discord. So again, our Discord is a great source of real-time economic data, news. Also, we have all kinds of channels. You can discuss all things trading, different asset classes, using different platforms, using different trading styles. So join your fellow BeachBum traders and actively participate in our free Discord. Okay, very quickly, a review of some of the highlights of the economic data from last week. So not much Monday through Wednesday. Thursday, we got weekly jobless claims data and durable goods orders. It's the initial jobless claims very much in line, up a little bit from previous. Continuing claims was actually below the forecast, but up a little bit from, or down a little bit from previous. So, and the average, 4-week average, down a little bit. So again, we're seeing no weakness in the job market. So again, no reason for the Fed to cut anytime soon based on increasing unemployment from the data that we've got thus far. Durable good orders from March was very positive. Again, in my humble opinion, I think this was front running the tariffs. So people trying to get things in ahead of the tariffs, store them up, and then they can sell them off when the tariffs are on and avoid those tariff costs. I hear a lot of ads for companies now, no tariffs, get in before the tariffs, etc. Friday, we got Michigan consumer sentiment. This was the final read for April. It's actually a little bit better than the previous read, although they expected it to be worse. So they'd forecast one-year inflation to go up to 6.7. It only went up to 6.5. Still very negative, but not as bad as feared. The 5-year is still at 4.4, so again, very high. Overall sentiment, again, pretty, not very good, but not as bad as expected. And current conditions improved from the previous forecast a little bit. So even though it was pretty negative sentiment, it was not as bad as feared. And so the market continued the rally. Although again, Powell kind of discounted these surveys and they're waiting to see actual consumer behavior. So this is not as relevant to market movements as it potentially was before they discounted it. Okay, let me grab a drink. We'll go over the rest of the economic data from last week. Look at the economic data for next week. Okay, let's see. We had some bond auctions on Monday, pretty much in line. IMF has been downgrading global economic growth due to tariffs. Got Fed officials still talking. They should stop pretty soon. We've got the next Fed meeting coming up. Just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content for education and hopefully some entertainment purposes only. And all these comments are my opinion only, not intended to be financial advice. Got some manufacturing data. Again, manufacturing weak. Crude oil stocks down. And we saw oil prices rebound a little bit. Mortgage rates actually up to 6.9, so negative for housing, although that was pre the bond yields dropping end of the week. Mortgage applications down, again, mortgage rates going up, applications going down, building permits weaker than expected. Manufacturing pretty flat. New home sales pretty positive, so people are buying new homes. Oil inventories up just slightly, expected to be down slightly. Again, pretty stable. Oil pretty range bound between 60 and 65 right now. Note auction not bad. Talked about durable good orders and initial jobless claims. Existing home sales very negative. So again, mortgage rates still high, rates still high, so people aren't moving out of their existing homes. So existing home sales pretty negative. The Atlanta GDP now more negative, negative 2.5. So it's forecasting a future recession. And we talked about Michigan sentiment. Here's the oil rig count. Oil rig count actually went up a little bit, a little surprising given the low oil prices. Also, OPEC still talking about increasing production in April. So a little surprising that the oil rig count went up a little bit. Let's look at the economic data for next week. Not much Monday, Tuesday. Got some retail inventories, housing. Get jolts, so we'll see if the job market's tightening up any. Get some more consumer confidence data. Atlanta GDP now. People are looking at this more often nowadays. Wednesday we get mortgages, and we get ADP non-farm. So first part of the jobs data for this week. We've got significant jobs data coming up next week. So on Wednesday we get ADP non-farm and jolts. Jolts was Tuesday. Get GDP for Q1, still expected to be positive. So again, we're not going to see the negative impact of tariffs in Q1. won't start to show up till Q2, and then when they're on pause, we might not even see that until later, so we're not going to know if we're in a recession. So again, GDP for Q1 expect to be positive. Consumer spending, is the consumer still spending? We've heard some reports of slowdowns of consumer spending. Get PCE, again, Fed's preferred measure of inflation, core PCE, supposed to still be positive. That's better than expected. That might bode well for future rate cuts, pending home sales, income. Thursday, we get job cuts and weekly jobless data. We'll see if that continues to show the job market holding up. ISM manufacturing, as manufacturing continues to slow down. Then Friday, we get non-farm payroll. So this will be the big indicator if we're seeing any deterioration in the job market. This will be direct input into the Fed's May interest rate decision, although again, in my humble opinion, I don't expect them to make any moves, any changes in May. I think they're going to state that they just need to wait and see more data, see the impact of the tariffs, which we won't really know until they get put back on after that 90-day pause. What kind of trade deals do they actually get in place? Where do they lower the tariffs? So again, this will have a major impact. If we see significant deterioration in the job market, that might prompt the Fed to move sooner. Also get factory orders. We're also, again, right in the heart of earnings season. Had several of the Mag 7s report, somewhat mixed earnings. So Tesla's earnings were pretty bad, but they hyped up some of their future robo-taxi, robots, etc. Stock went up. Again, in my humble opinion, I think their guidance and what they say about the impact of tariffs and business going forward much more important than their last quarter earnings. Although if they're weak already, like I guess PepsiCo is already seeing some impact from tariffs and had pretty negative earnings and got hit pretty significantly. So that'll impact similar companies, in the consumer defensive area. Again, highly recommend you go through the earnings calendar, see where the important economic earnings are. There's Coke, so that might be negative for Coke, Domino's. We'll see, that could impact. We're watching Papa John's, pizza. Got more of the Mag 7s. We had Google. It's pretty positive, so they're not seeing a slowdown in their advertising. But there's comments that Meta gets a lot of advertising from Temu and some of the Chinese companies. So watch out for those companies that are getting significant revenue from Chinese companies, as that may drop off. So again, tons of earnings. I don't know offhand. Somebody can probably post. There's Visa, Coke, etc. When some of the other Mag 7s. I know we've got some of the other Mag 7s coming up. There's PayPal. Easy Mike was talking about PayPal the other day. Kraft Heinz getting some defensives. So see what the impact of tariffs on them. So again, tons of earnings. Again, my humble opinion, I think their guidance, the impact of tariffs, if they're cutting back on CapEx. We also heard Meta's cutting back on their metaverse reality division. Again, see that hype is over and metaverse hype is over, so they're cutting back their spending in that area. Have to hear if companies are also cutting back their spending in areas like AI. Not sure when Apple and Nvidia is going to be late. Amazon, I think, is coming up. And you can search through there. So yeah, definitely look at the whole earnings calendar. And again, if anyone else knows the dates for some of the Mag 7 significant earnings, please feel free to share that in our Discord. Help your fellow BeachBum traders if those earnings may impact them as well. Again, then the following week, we get the next FOMC meeting, interest rate decision. Again, my humble opinion, I don't expect any changes. So I think they'll just say they need more data from the actual impact of tariffs. So I don't expect any changes in May, um, possibly in June, but now they're talking about possibly pushing that to July, as they again wouldn't have enough data in June to make any decisions unless we see a significant deterioration in the jobs market. So let me grab a quick drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they still offer at least 20 free fractional shares of stock if you open and fund your account with as little as $500. Each fractional share worth $3,000 to $3,000. You'd use our affiliate link in the description box below. Get your free fractional shares of stock. You can take advantage of any other promotions they have at this time and also help support our BeachBum trading community, all of which we greatly appreciate. Welcome the Crow. Thank you for joining us. Hope you had a great trading week and are doing well. So I'm using the market screen, the online browser version of Webull. This was quite interesting, even though we saw the indices were significantly positive. The distribution of advancers and decliners was quite balanced. Many small advancers, small decliners. So again, histogram's very balanced. So that shows us that the indices were driven mostly by the Mag 7s and not really overall market breadth. So again, some potential weakness under the covers. We did have very positive inflows in both the NYSE and NASDAQ all day on Friday, so increasing positive flows. So it's positive money coming into the market after that 4-day rally. Did see a slight decline, improvement in the fear and greed index. So last week we were down at 19, and we're at 21, but we're still very close to the extreme fear in the fear range. So again, a lot of potential risk. Protect your profits. Again, be aware there's still a lot of uncertainty in the economy, etc., and a lot of fear in the market. So again, we did see some improvement back from the low of quote Liberation Day. Has slightly improved, but again, going to be volatile based on tariff trade news, and also we probably will see a correction in the market after that 4-day rally. So again, you can see the near-term earnings calendar and the calendar widget in Webull. Go day by day, see who's reporting earnings on a day-by-day basis, see their expected earnings, etc. So again, a great way to keep up with near-term earnings in the calendar widget in Webull. Yes, Ricky Khan, we'll talk about that. URAX is closed, delisted. Again, we'll talk about that. I've removed it from our ETFs, and we'll look at some alternatives for uranium. So let's look at the best performing industries for the week. So software, automotive's got a reprieve. Again, swinging. Semiconductors seem to be swinging back up. Financials pretty positive. Retail mostly positive. Biotech, strong rebound. Uranium, again, positive. Banking, mostly positive. Banking, some negativity in hotels and entertainment. Travel, we've heard about some potential slowdowns in travel, so watch for some potential weakness there. Healthcare, positive. Transports, mostly positive. So again, technology, mostly the strongest. Financials. Look at ETFs. So some directions, broad technology, TECL, TQs, leverage on the Qs, although down on the biotech. So Lab D is the inverse of Lab U. Up on the Dow. In broad technology, but down on biotech. Up on the S&P. Up on the NASDAQ. That must be a Palantir one. I don't know why that's in volatility. Up on the Russell. Small caps had a pretty good recovery. Industrials, this is a new defense, NATO-based defense ETF. So again, relatively new. You can take a look at that. We may add that one as it matures. Financial services pretty weak. Healthcare mixed. Utilities, again, we saw a rotation out of defensives, out of risk off into risk on. So into communication services. Energy just slightly positive. Real estate mostly negative. And rotation out of basic materials into technology, into consumer cyclicals, out of defensives. So again, saw that rotation from defensives into risk on. Again, mostly Mag 7s. Commodities, sugar, oil tankers, natural gas, again pretty volatile, dipped below 3, rebounded. Sugar, 25-year bonds, high yield. Okay, let's look at the futures. Quick reminder, you can now also trade futures in Webull, so you can get more information on how you can trade futures in Webull via the posting in our Discord. So again, we'll see these long-term downtrends in the markets, although again, we had that rebound 4-day rally in most of the major indices. You can still see the general trend is down, got that gap up for the rally. So again, in my humble opinion, protect your profits. I would not be at all surprised if we saw a correction to fill that gap from this 4-day rally. So again, my humble opinion, protect your profits. Defend your positions, etc., and be ready for a correction in all the major indices. So again, we see the general long-term trend is still down, even though we had that slight relief rally. Wouldn't be at all surprised again if we get any negative news on the trade talks not progressing as quickly as possible, get a downtrend. We get some positive news. We saw, and just any positive news in trade talks gets an exuberant, possibly overly exuberant positive reaction from the markets. So Europe and DAX and Germany, also very positive rebound, very strong rebound. You see they're still significantly below the Liberation Day level. So positive news in those areas could give us more upside in Europe and the DAX. Similarly with Japan, if they come to a trade deal, might get more of a recovery there. And saw that gap up in the Russell, and then it kind of went flat. So again, possible correction in the Russell. Definitely want to look at the term structure in the VIX. So after the spike on Liberation Day, downtrend, a little bit of a bump on further tariffs. and then a strong downtrend in the VIX, now below 24, 23.5. So let's look at the VIX term structure. So again, you can find the VIX futures term structure tool on our homepage, beachbumtrading.com, bum without the U. Go to the links section, down to the reference links, got the VIX term structure, futures term structure. So we can see the current VIX is still significantly higher than the front month. We can see the backwardation though is flattened out a little bit. So we still got the front month at 23.5. June is pretty flat, 23.26. Got a little bit of a decrease, or a little bit of almost a bump up in July. That's probably when the 30 or the 90-day halt on tariffs is going to expire. So in my humble opinion, I think the front months of the VIX probably drop unless we get some bad news. But this July time frame, late June, July, when the tariffs are scheduled to expire, will probably stay a little elevated. So I expect this backwardation to reverse into a short-term contango. But then again, we see further backwardation going out from there. So my humble opinion, I think VIX is going to continue to decline, possibly test that 20 level. So short the VIX, we have positions on both sides, just to hedge whether we get a significantly bad news. If tariff talks fall apart, we get a spike, UVXY, short SVXY, etc. But again, short term, I think this downtrend in the VIX will continue. I don't know if it'll show us the historical prices very well. So again, we can see that pretty much backwardation in the current term structure, but longer term future contango. So hope that all helps. Okay, again, we saw oil dip below 60, rebound, test 65, got rejected. So now it's kind of range bound between 60 and 65. Natural gas actually dipped below 3 briefly, rebounded. So got that support level at 3. We'll see if that continues to roll over. Or if it's going to swing back up. So we've got ETFs, gold and oil, as well as others in our ETF sheet. Just a lot of volatility, short-term swings. We haven't had a real long-term uptrend since February to March, and then down March through May. And gold broke its all-time high again. 3,500 got rejected pretty quickly. People said that 3,500 was a notable level. Sellers thought that was the top, so it rejected back down below 34. Again, very strong uptrend, very parabolic in the near term. So we'll see if we get another swing back up, new all-time high in gold. Silver looks like it kind of topped out at that previous bottom, a little below 34, possibly retest back down to 32, and then we'll see if it swings back up as well. Copper similarly kind of topped out, gone flat. Got some agricultural products, soybeans up, corn pretty flat, oats back up, wheat kind of broke that 560 level, got rejected, back down to 540, pretty good support at 540. If that does break down further and retest its recent low, we were long wheat, made some money on that swing up. Got stopped out on the swing back down. If it does continue to retrace back down, we'll look at another swing long on wheat using WEAT. Again, most of the ags are mixed, so DBA's been doing okay. Cocoa swung back up. Saw that inflow into cane, the ETF on sugar. So people betting that's going to swing back up. Lumber, very volatile, very sensitive to tariffs. So we'll hear if the impact of tariffs. We do have several ETFs, cut, wood, in our ETFs Google sheet. You can take a look at it if you want to play lumber and timber long. And we saw a decrease in bond yields, swing back up in bond prices. It kind of all hit that previous low. 10-year did break above its previous high, so it's trending up. So we'll see if these trends continue. With bond yields continue to go down, prices continue up after a very steep decline after that tariff announcement. Also, the dollar hovering below 100. So just kind of that resistance level. Euro 115 broke that briefly, kind of a stabilizing level there. In New Zealand and Aussie dollars, strong rebound after that steep decline on Liberation Day tariffs. So again, plenty of opportunities in the foreign currencies if you trade Forex, or again, we have a number of ETFs you can trade these foreign currencies. You can find those in our ETFs Google sheet as well. Okay, let me jump forward and we'll talk about how to make money trading in May, and then we'll come back and look at our ETFs that we can use, trade these various trade ideas. Grab a drink and we'll talk about our theme for this week. Okay, again, our theme for this week is how to make money trading this May. So we'll look at the seasonality for May using this article in Investopedia that we look at. We look at how May tends to perform. You can see in the past 24 years, May is actually positive, but much less positive than April. So we do get a steep drop off in May. Part of that, in my humble opinion, is attributed to the saying, sell in May and go away. So a lot of people expect that. So we do see that drop off. Now, prior long term, May was actually negative. So past 24 years, it's actually still been positive, 0.49%. But longer term, since 1928, it was actually negative 0.06. So it looks like in the past 25, 24 years, the bottom has kind of shifted to June. We see June goes negative past 24 years. So maybe again, an after effect of that sell in May and go away. Although again, longer term, since 1928, we see that June was actually positive. So again, slight shift in how May has performed in the past 24, 25 years. So just be aware of that. So again, in my humble opinion, we have talked before. You want to sell in May, that's fine, but don't go away. Again, our humble opinion, there's still money to be made. Also, again, with this adage, the sell in May and go away adage being very well known, very popular. Watch out, a lot of people might sell before the end of May. So again, another reason we might see that downdraft in the market, particularly after this 4-day rally we've had. Also, again, we've got the Fed decision coming up May 6th and 7th. Although, again, I don't expect any change there. You might see people exiting right after we had this strong rally ahead of the Fed decision. You can hear, again, how the markets typically perform in May and the best performing sectors and industries in May, and also our previous trading strategies for making money trading in May. We have the links to the videos all in our notes. So let me know, what do you all think? Do you think we're going to get a lot of people selling before May? Are they going to go away? Do you think that's going to be a strong negative trend in the markets for this year? Please let me know in the comments and our Discord, etc. I think we're going to see a lot of people exiting the market, or are they going to stick around? A lot of volatility, uncertainty with the tariffs, and we won't get any resolution of that anytime soon, in my humble opinion. But we do have the pause on for 90 days. So again, we might see a short-term rally while that pause is on, and then a downturn after that. So again, I still think that this general historical seasonality is going to be trumped by the tariff talk, the trade deal talk. Do they get a deal? Don't they get a deal? And again, it's going to be very news driven. So again, I think short-term trading, scalping, day traders probably find more opportunities in this market than any kind of longer-term swings, but we'll continue to look for swing trading opportunities as well. Also, we've been talking about the general trends for trading in the spring. You can hear our discussions on the typical historical trends for trading in the spring, best performing sectors and industries in the spring. And I think tariffs are going to outweigh the traditional historical seasonality, but you can see how things typically perform and some of the best sectors and industries, both for May and for spring. We'll go back to our ETFs. If anyone in the chat has a particular ETF you want to take a look at, please, or a category, topic, commodity, etc., please throw those up in the chat. We'll take a look at those. Got a couple updates, and we'll take a look at those as well. Let me grab a drink, and we'll go through our ETFs. Just a quick reminder, when we come up with our trade ideas, our trade strategies, and we jump over to our ETFs Google Sheet, we can find ETFs to trade those trade ideas, trading strategies, be it long or short. And we use our ETFs Google Sheet to identify the ETF with a risk-reward profile, leverage, composition, etc. that we like. And you can do likewise, get 24/7 access to our ETFs Google Sheet by joining our Patreon. Firstly, as was mentioned earlier, URAX, which was a leveraged long on uranium, has been closed, delisted. So we removed that from our ETFs Google Sheet. We do have a number of other ETFs for uranium. So you can find some in our main ETFs Google Sheet. So if we just go down to uranium very quickly, we have some in our main sheet, some of the ones with the best risk reward profile in our humble opinion. So URAX was actually a leveraged long based on URA. So URA was the base. We've used URNM before, and you can see it's currently showing looks like the best risk reward profiles, URNM. So we'll probably use that going forward, although you can see URA showing a near-term very attractive risk reward, and very long-term, very attractive risk reward. The junior miners, not quite so much, but if you'd like to trade the junior uranium miners, we have URNJ. Also have a number of additional ETFs on uranium in our research sheet. We've reviewed these before in the past as well. So one on nuclear and uranium, nukes and UKZ, got URAN, again, another mixture of uranium and nuclear. And then we've got the VANEC, uranium and nuclear as well, NLR. And you can see the current risk reward profiles of each of those. So you can compare the various ETFs for uranium. Again, the ones that, in my humble opinion, have the best longer term risk reward profile we keep in our main sheet. So let me know what you think. What's the next best, since we can't trade URAX as a leveraged ETF on uranium anymore. What's your preference and why? I'd love to hear your feedback. And again, we'll be watching these and comparing the risk reward profiles if we get an opportunity in uranium, although again, it's a little up, URA up from its bottom significantly. Next one I want to quickly take a look at is MD had asked us to look at GRNY in the live chat on last week's part 2. So we added GRNY to our research sheet. So if we do a search, find for GRNY, see this is called the FundStrat Granny Shots US Large Cap ETF. So I've categorized that under large cap, so we can compare that to the Schwab US Large Cap as well. But you can see the risk reward profile, 52-week, about 1.4. Looks like it's relatively new. So all we have is some near-term history on it. So if we look at it in FinViz, again, you can quickly access the FinViz profiles via the link in the FinViz URL column. So here's GRNY, FundStrat Granny Shots US Large Cap ETF. You can see it is relatively new, just been around since November. So had a pretty steep decline even before the tariffs. So steep decline, looks like it bottomed on that Liberation Day, rebounded pretty strongly. We see a still pretty strong downtrend. Had a nice rebound, broke its 50-day on the current rally. See, AUM's not too bad. It's approaching $1 billion, so it's getting some popularity. Although the volume's only 1 million, so lightly traded, but potentially choppy. Risk reward, again, don't have a lot of history. Not too expensive, 0.75. It is shortable, so you could short those downdrafts. It is optionable. You look at the composition, 30% technology, then electronics, so pretty heavy tech, then finance. So it's got some insurance. So Progressive is the highest holding, then Netflix, Strategy, Palantir, Abbott. So pretty broad mix. Costco, some retail, security, CrowdStrike, GE, so industrial, some banks. So pretty good inflow since its inception. So again, gaining some popularity. Seeks long-term capital appreciation, actively managed, investing in U.S. large cap equity securities, large cap U.S. companies. So again, focused on large cap, although again, pretty diversified. So if you're looking for an actively managed, diversified portfolio or ETF, don't see dividends yet. So don't know if they plan on paying dividends, but it's not showing right now. So MD, if you can let us know more about what you like about Granny, the Granny shots, U.S. large cap, what your thesis is. Again, looks like pretty good diversification of large caps. So far, it's been relatively stable. Looks like it's gaining some popularity. So again, please let us know your thesis on Granny, and also what do the rest of you think of Granny as a large cap ETF. Can you compare it to the other one we have, which is Schwab, SCHG. Again, we don't have a lot of history on Granny yet, but so far it's outperforming SCHG this year. And again, we'll see if it can outperform SCHG over the longer term, if this would be our preferred large cap, US large cap ETF. So again, I'd love to hear in the comments in our Discord what you all think of Granny as a large cap ETF. Please let us know. Otherwise, again, just very quickly, we have a whole distribution of ETFs. You can trade various themes, countries, topics, commodities, long or short. And you can see Brazil, cannabis has been swinging back up. I think it had a bounce up for a 20-day. And take a look at that. Again, many of the other countries, China, etc., you can find in either a main sheet or a research sheet. Commodities, we recently profitably traded METC on coking coal. Saw a little bit of a rotation back out of that. Might get some more opportunities there. Sectors and consumer sectors, commodities, etc. Saw people mentioning, the leverage on gold. So you can trade gold long or short. GDXD, GDXU. Also, we've got several others. Talked numerous times about different compositions. Again, if you're nimble, we saw that quick retracement. So, but again, the long term is very strong in gold. Similarly, silver, AGQ, ZSL, natural gas. We saw those swings in natural gas, again, pretty volatile. Oil and cold, oil, and had decline, so gush and drip, SEO, UCO. Rare earth, this here's a ETF for rare earths we've talked about, REMX. We have also single stocks, so there's silver, AGQ long, ZSL short. So that volatility in silver. Again, short-term traders, plenty of opportunities to make some good money if you're nimble. And we talked about SOXL, looks like it's swinging back up. And we've got single stock ETFs for Tesla, NVIDIA, etc. Have others in our research sheet as well. I know the Crow's great with sharing additional ones as they come out. The MST, etc. So as these mature, if we start using some of the other leveraged ETFs, we'll add those as well. Got quite a few. And treasuries, so volatility there. You pick the time frame, the direction, etc. Talk about uranium in other countries, Vietnam, etc., Japan. Talk about wheat, and also the yen. And we've got other foreign currency ETFs you can find in our ETF database sheet. So again, if you're looking for a ETF, you can long, or some of these may be potentially shortable. If you can short the ETFs, you can trade the foreign currency volatility around tariffs, etc., using the ETFs in our ETF database sheet as well. So I hope that all helps. I know I'm running a little long, so if you have any other questions about ETFs for a particular topic, commodity, etc., please put those in the comments to this video or in our Discord. And please tag us in our Discord. We're BeachBum Trading, all lowercase, no other characters, symbols, etc. Anyone else is an imposter, please report and ignore them. But again, if you have any other questions, ETFs you want us to take a look at, potentially add to our ETFs Google Sheet, please put those in a comment to a video or in our Discord. Also, we'd love to hear your feedback on what we can continue to do to improve our weekly trading game plans, any of our other videos, our tools, our Google Sheets, our community, etc. What can we do to continue to add more value for all of our fellow BeachBum traders? Please let us know in the comments to a video and or in our Discord. We hope you like this content. We'd greatly appreciate it if you'd smash the like button on our videos. Help us try to get the YouTube algorithm to someday show us some love and share our content with other traders around the world. Help us continue to build our BeachBum trading community for the mutual benefit of all of our BeachBum traders. Also, if you directly share our content, repost it on your social media sites, etc. Again, let's continue to work together to build our BeachBum trading community for the mutual benefit of all of our BeachBum traders. So given all these trade ideas, etc., about how to make money trading this May, we'll take all this data and we'll come back tomorrow for part 2 of our weekly trading game plan for this trading week. And we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we use dividend payers and several option strategies to make money trading while we wait for our swing trading stocks to set up. So we hope to see you all again 10 a.m. on Sunday for part 2 of our weekly trading game plan for this trading week. So thank you again to everyone that participated in the chat, everyone who's watching after the fact, and we hope to see you all back tomorrow at 10 a.m. for part 2. Thank you again and have a great day.